It's Brian Preston, the money guy.
Okay, so $1 million, we answered the question, probably not going to be enough for someone in their 20s. Well, what about someone in their 30s? If I'm a 30-year-old, is $1 million a large enough goal? Will I be able to retire if I just get to $1 million and I'm in my 30s presently?
Well, taking into account, once again, inflation. And now, look, you are getting closer to the goal, so maybe inflation hasn't eaten as much.
Sure.
But we're still decades away. It's gutting a pretty good chunk. But first, before we go to the negative side, let's get people excited about what their army of dollars can actually become.
Yeah, remember, early on, time is your most valuable resource. So if you're a 30-year-old just starting out and you have a goal of getting to $1 million, it's only going to require you, if you're starting at dead zero at 30, to save about $270 a month until you retire. Just that small amount of savings can get you to $1 million. When you get there, about 90% of your portfolio would be your army of dollar bills working for you.
The growth.
The growth, that's exactly right. So the question is $1 million enough for you in your 30s?
Unfortunately, once again, the answer for a 30-something is probably not.
Probably not. So again, if we assume a 3% inflation rate, $1 million today would probably be worth about $401,000 for a 35-year-old when they get to age 65. And again, if we assume a 5% withdrawal rate, that would generate an annual income for that person of about $20,000 a year. And so $20,000 is better than what it would generate for the 20-year-olds, but still may be hard to have an entire retirement lifestyle built off of $20,000.
Fortunately, there's a resource out there. You can go out there and see what is the typical living expense of Americans. And according to our research, it comes in a little over $2,800 a month. Well, doing some quick math, we can see $20,000 a month is actually just under $1,700 a month. That's why we say it's probably not enough.
Probably not.
Is because it's inflation's going to eat away at its purchasing power. Adjusting it for today's dollars, you're going to need to put a little more work in.
Now, here's what's interesting. Daniel said, guys, I feel like you're giving unfair shake because I think, right, a lot of folks could live off of $20,000 a year. This is what it means, though. There's no luxuries, no dining out, no giving gifts, no new gadgets, no new toys, and no unexpected surprises. Well, I guess if that's the kind of like retirement financial independence life you want to live, then maybe it could work, but odds are probably not.
Well, this is, and look, I'm not trying to pick on fire, but I do think it's one of those things for 30-somethings, even if you're living that minimalist lifestyle. We know, because it's an annual research report that comes out every year about what is healthcare going to cost for retirees. Sure. We know it right now. It's anticipated over your lifetime, you're going to spend about $316,000 on healthcare, and we know that's probably going to be weighted heavily towards those latter years. So that uncertainty right there would blow up somebody kind of thinking this is enough money, for a 30-something.
But you've already said, Brian, our goal, what we like to do is we like to go beyond common sense. We like to take our stuff to the next level. So if $1 million for most 30-year-olds won't get the job done, the next question is, well, how much do you need? So again, let's look at a case study. Let's assume that your goal is to replace 100% of your pre-retirement income. You can earn an 8% rate of return on your investments. Your wages increase at about 3% per year. You want to retire at 65, and you feel like a 5% withdrawal rate would be sustainable over the remainder of your life. Well, right now in this country, according to don'tquityourdayjob.com, DQYDJ.com, about $50,000 is the median income for someone who is 35 years old. So if a 35-year-old wanted to replace 100% of their pre-retirement income by the time they get to 65, they will need to have saved about $2.5 million by the time that they retire. It's actually $2,456,000, or about $2.5 million.
And here's what I think is interesting. You've got it right up there on the screen. You'd have to start saving. This looks like a pretty big number. So fortunately, we have this broken down a little more digestible number. If you had already started saving by the time you were 25, $1,649 a month.
That sounds hard, right? Like as I'm saying, that's a big. I mean, a lot of folks. That's like might be more than like your mortgage payment. Might be more than like your mortgage and your auto payment. That's a big nut.
That's
for most
starting
folks.
from zero for a 35-year-old. I know we have a lot of financial mutants that are watching this. They actually started sooner.
That's right.
So if you had started saving earlier, all you'd have to have, as long as you were at, because a 25-year-old who was just doing basic investing would probably already have about $128,754,
Okay.
so right under $129,000. And if you had that, as long as you were right under that $129,000, $130,000, you'd only need to save $704 a month for the
So-
rest of your working career.
I'm going to repeat what you just said. If I'm 35 and I've got about $130,000 saved up,
Yep.
and I can save about $700 a month, I'm on my way to having $2.5 million by the time I retire. And that's probably going to allow me to live a similar lifestyle in retirement that I was living immediately before retirement.
Yeah, that's exactly right.
So, okay, so for a 30-year-old, it doesn't sound like $1 million is the number. Maybe that's not what you shoot for. Maybe it's something closer to the $2.5 million range.